Hello guys, good morning. Today is Monday, and last week or the other week I bought a stock. Okay, as usual, this is my strategy. I bought always a stock at the end of the day. It could be like 3:30 or 3:45 before the market close. Okay, I choose it because I like it, and it is based on my selection and of my rules. Now, what has happened the other day? Okay, I bought it at the end of the market of the day, before the market closes, and tomorrow I have a habit. Around 8 o'clock a.m. I just open my account and see if there is a gap up, if there is a gap down, if there are some news for some stocks that go up very high or go down. Just to check, but I will not change anything most of the time, except when there is a gap up I sell. Now I check my my stocks and I don't find one. The one that I bought yesterday, it means at that day, I don't find it. And I find some abbreviations and numbers, and I see that I lost the whole position. I don't find the position at all. So if you don't find the position, what does it mean? It means they take money from your account. Okay, and it is a big chink. I say, how can I buy a stock and I don't find it? It's like mysterious thing. That's why I told you before that when you trade for a long time, what will happen to you? You will see a lot of things that you have never heard of. So when you get to know such thing, you will experience a new experience, like a new thing in trading. Now, before I call my broker, because this is what you should do. Okay, there is something wrong in your account, and you just open it. You don't find something, or there is a fee, or there is something wrong. Okay, and you know it's wrong. So what you should do, you should call your broker. But for me, since I don't find the stock, I just go online and check, because I don't check these companies. Okay, I don't check them. I don't check their news. I don't care about all what they do, all what the analysts do. What I care about is the price. Is it going up or going down? Okay, and since I'm always on the up side, most of the time, stocks that go up are good. Okay, stocks that go down, you will have to wait and see, and just the future will tell you. Now I check online and I find that this company was bought by another company. It means, as I told you before, a big fish eats small fish. Okay, so as I told you, a big fish eats fish. So for me, what is important for me is to get my money back. Because if a company buys another company, what does it mean? It means that the first company that was bought, the ticker will be gone. Okay, will be gone. It will be like delisted, because it doesn't exist anymore, because the whole company will be included in the other company. So since the other company has another ticker, another symbol, so we will not have two symbols. Okay, we have only one symbol, the big company. So what has happened? When I understand this, I am okay with that. I don't care if a company buys another company and my shares are in another company. For me, it's just to get my money back. And for true, I called the broker and they told him what did happen here. He told me, okay, a company, it's another company, it's okay. And with my money, he told me they will send us your money and it will be in your account in few days. This is what happened, and then I get my money back. I don't lose any money because whatever the price I bought with, they send me money. And this is what a strange thing. No, a lot of things happen like this, but most of the time, if you don't know what's going on in your account, just call your broker. This is the first thing you can do. Okay? You don't understand what's going on, you find money added to your account, or you find money that is taken from your account, or you don't find a ticker, or there is another thing about this, is when a company has bankruptcy. Okay? But this is another thing, because most of the time, if your company that you are investing in or you are trading in is bankrupt, you will not see the ticker and you lose all your money. This, if the company, if it is bankrupt, most of the time they will give money to what we call to the investors who have what we call preferred shares. Preferred shares is not like common shares. Okay? Preferred shares are shares of the company, but they give a guarantee that they will give them their money back, okay, from the price that was there. Okay? But common stocks, like us, like when you go and you buy online like this, they don't give your money. If they have more money in the company when it's putting down, they will give you, but most of the time they will give you nothing because the company is bankrupt. That's why I told you always, take it this as, I don't say advice, I don't advise you, okay, because I am not a financial advisor, and if I advise you like this, I should be paid for that. No, I'm not a financial advisor, but believe me, a stock that it is going down for many years, what do you think? Someone like this, someone sent me an email, as usual. It says, my stock is, what do you think about this company? It's $2 something. Now, when you see this company, I go to the back, like 1 year or two. I see this company was $65. Now I sent him an email. Your company was 65, now it's 2. How are you investing in this? The company has lost all its money and maybe it's going to bankruptcy. Because people, they believe what the people online are saying, or what the company is saying, or what the analysts are saying. Okay? Some companies are in trouble and they are going to bankruptcy, but they don't say it to the people. Okay? So if they say to the people, what will happen? It will be a rush to sell. Okay? And the company does not want people to rush to sell because they want to get that price and take it from the exchange. For example, the stock is $2. Let's say they have 1 million shares. 1 million shares, let's say by $2 is $2 million. Now this company wants to take this $2 million out of the exchange. It took it. Okay? Now you, since you have shares there, you can't take your money back because you don't sell. Okay? So that's why when you believe that the company will give you the right information, it is not. And it has happened a lot. If you go to see history of companies that were in bankruptcy, no, they were in bankruptcy, but they will be in bankruptcy, but they don't tell. And people, they invest, and one day you will not see your company in your broker account. And then you say, where's my money? Where's my shares? And the broker told you, oh, you don't know? This company is bankruptcy. And it get delisted. So you tell him, where's my money? You have no money. Because the company has no money. The 2 million they took it from account, for example, from all the shares is taken by the company back to them, and they get delisted. And what will happen? They give most of the money, give it to what we call the preferred shares. Preferred shares, it means the people who buys a certain kind of shares. They are called preferred shares. If you want to know more about this, what's the difference between preferred shares and common shares, please just go online and Google it. It's very easy, and you understand the thing. Now, online, even if it is filings of the company, don't think that this information are correct, exactly correct. No, they are not, because who files the information? Who? Okay, it's the company. Now, is there an investigation in each filing and they go and they check? No. The Security Exchange Commission, they don't go after each company and they see if the numbers are correct, because they can't know, because the only one who knows the company is the company itself. They know what they sell, what they so there are a lot of things that the company hides when in trouble. And you, it means I and you and the public and everyone online, even in TV, they don't know. Okay? If they say to you, if a company was 65 and it goes to $2, and you will see the findings that they have earnings. What's this earning that they have? Okay? They're losing money. The stock was 65 because why is that? Why is the price is always the only exact thing for me? If you tell me I am investing in a stock that it is $2 and last year it was $65, I will never invest a penny. You know a penny? 1 cent. If you tell me put 1 cent, I would never put it in there, because I know that this company is going down, and the price, because the price is the true thing. If the stock is going up, someone is buying. Buy. Few days, a few weeks, a few months, and when you get enough profit from the stock, get it out, exit. That's it. How to make money. We don't make the money, like especially in swing trading, because the company is good. I don't care about the company if it's good or bad. I don't care. I see the price. If the price is going up, this is what I like. This is a trend. That's why swing traders are trend followers. They follow the trend, uptrend or downtrend. Okay, but for me, most of the time I like uptrend, because there are a lot, and the stocks, they should have an uptrend. Okay, if they are not trending into orange or they are not going down, they are going up. So three things only in the stock. Either it's trending into orange, it means going up, let's say from 10 to 15, then from 15 it goes to 11, then from 11 it goes to 16, then from 16 it goes to 9. So it means it's going zigzag, go up, go down. Now, okay, this kind of thing is called trending into a range. The range could be small, it could be big. Some stocks that are 100, it can go to 50, then it goes to 70 or 80, then from 70 or 80 it goes to 40. It means this company is having more money and then it loses more money. Having more money and then it loses more money. So for me, I am not interested in those. I'm interested in the stocks that go up for a long time. Okay, I want to follow these big trends, and in big trends we have small trends. So I begin with the small trends, and if the small trends goes to intermediate for weeks, it's good. If it goes for months, it's better. Okay, but not for years. Okay, because for years is too much. Okay, because swing traders doesn't stay for years, because you become, after 1 year you will become an investor because you stay too long. Okay, so understand that I have taught someone before. Okay, he was an investor, and he told me that he succeeded in one stock and company and he didn't succeed in the other one. Now the other one has doubled, okay, in many years. Like for example, let's say it is $100, it goes to $100 for 5 years or 3 years or 5 years, and then it was a stock, it goes down and down and down until it gets bankrupt, and then he lost all his money in the company. And I tell him, you don't have a plan when you exit. Even if you are investing, you should have at least a plan. If your stock was 100, you let it until it go $20, and then you decide to go out. If from $100 it goes to $20, you lost 80% of your money. Do you understand this? 80% of your money, and you are staying in the stock. Okay, so you should have a plan. That's why when you do trading, day trading, swing trading, or investing, you should have a plan where to enter, where to take your profit, or where to exit when you have a loss. Okay, you should have a plan. You don't just stick to the company and you say, oh, it's good. Okay, if the stock is going down, it takes each day, each week, it takes from your money, from your position. Okay, it's like you give the market a blank check, and each day you say to the market, please put your number and take it from my account. No, the market will write any number that he likes. Sometimes the numbers are very, very big numbers. Okay, and maybe you have been trading and you check that sometimes the stock is 100, the next day is $50. Okay, or less. Either in trading the whole day is going down the whole day, or there is bad news or bad earnings or whatever. Okay, so what I tell you, what's this experience is that when you buy a stock and you don't see it in your platform on your account, the first thing you do is search, or you call your broker directly and understand what's it. Don't let it go like this and don't ask. Okay, because in your account it happens things, but since you don't see your account, you will be surprised that maybe they charge you a fee that you don't know, maybe they give you some money that you don't know about, maybe they take money that you don't know about. So each time, take your account and check what you are doing. Okay, just check, see if something is missing, or stock you bought you don't find, or like this. Okay, so it was a very good experience when I was like, I don't find my stock, but it was a good experience because I get my money back. So I don't care that much, and I don't care even about this company that it was sold to another company, and whatever. For me, it's just a transaction, as I told you before. Don't take it personal with the market. The market is not a person. The stock is not a person. You love this person like you love stock. The stock is just a means to make money. Okay, it's like someone who is selling cars. He buys cars and he sells cars. Okay, is a dealership. Now it's the same. You buy stocks, you sell stocks. Someone who has a restaurant, he sells a dish or menu or sandwich or wherever. Coca-Cola sells Coca-Cola. Okay, she makes Coca-Cola. She says, this is the thing. It means you do transactions. You don't stuck in one transaction and you become to love this transaction and to love this thing. Okay, because when you put feelings in any transaction, okay, you will lose money because you are doing business. Okay, you are not doing charity here. You go to the market, you put your money, and the market takes your money, and you are happy with that. Okay, and you say, oh, I will stay. Okay, you will stay. They will take more and more and more until you get nothing, and then you get crying and whining, and then you sell, and then you begin to sell. Oh, the Wall Street guys take my money, the market take my money, and then you become to revenge or to trade here and there and here and there until you lose all your money. This is what will happen. This is what has happened 200 years ago, and what's happening now is the same thing. The market is the same thing. Okay, someone tells you that the market is, no, it's not the markets that change. What's the change? Stocks go up, stocks go down. If you buy the stocks go up, you make money. If you buy the stocks that go down, you buy them for long, you think they go up and they go down, and you stay with them, you lose money, and that's it. Okay? So this is the truth about the market. The market is always doing what it's doing. So let the market do what it does. For you, you should see yourself. You are doing a business. So you should control your money. Put your money in a stock that go up. If you make money, that's okay. If you don't make money in certain stocks, you don't wait too long. You should put a stop loss and you exit that trade and you do another trade. That's why how do you make money? It's like this. It's like a day trader. Each day he trades once, twice, thrice, depending on what is available. And each day he trades. Each day he trades. This is how he makes his money. A swing trader is the same thing. An investor, it's just time. He chooses 1 or 2 or 3 stocks in a year, and he continue with them until the next year, and he sees. If they are good, he will stay with them. If they are bad, he will replace them. That's investing. And all the people who are in the market do the same thing. Something is against you, you should exit. You shouldn't stay that long. Okay? So my opinion is that from this video, what you understand from this video is that if you don't find, you buy something you don't find, the first thing you do is always check your account, and then you check it either weekly or monthly. But most of the time you should check what are your positions. Okay? And then if you find a problem, you just call the broker. Okay? Call your broker and ask him for clarifications, for information. Okay? If he knows better than you, because he's always, they have news and they follow things, but maybe you don't follow, or you don't know. For me, I don't follow at all what the news, what the company, well, I have never seen. The only thing I see when there is something new, I will just check. Okay? So I don't care about what analysts say, about what the company says, and whatever. So I don't buy because they told me to buy. Okay? I buy because I see a signal. That's why I buy. Okay? So thank you very much for your time. And if you have a question or you want to share another story similar as mine in this video, just do it. Thank you very much and have a nice day.